Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today we have decided to take a look at the Great British Pound because here we have actually the scenario that we're following. We just haven't talked on it with the details in the last week because market last week mostly was going around the targets that have been met previously, and most of the time we have dedicated to euro currency. But still, this scenario that we have is a medium term. If you remember, those of you who are following our weekly research probably remember that in the beginning of the April we have discussed the starting point of this scenario, and the first target that we have specified for this scenario was this top that should be hit here. It's around 127 area. Mostly it was based on the bullish grabber that has been formed here, and we said this top should be taken out. So this was a mostly weekly scenario, weekly background, weekly pattern. And 2 weeks ago that has happened. So you can see the market has completed this minimum target. So this top has been exceeded, weekly grabber has been completed, and market has completed also some targets on the way up. So we have this ABC bottom minor 618 extension, 100% extension of this ABCD. Also, we have this minor inner ABCD pattern on the butterfly and 127 extension of the butterfly. Right now, as you can see, market even showing some acceleration up and has exceeded these targets. Also, I don't have it on this chart, but if you will build the levels from this top to this bottom, you will see that 2850 approximately was the fib resistance. Market also has exceeded it. So, as you can see, that was rather strong resistance cluster. Market has broken through it. This makes us think that maybe Great British Pound will not stop this upward action on the minimal target that we have specified, but really could continue for some time more the upward action. Still, current situation has some nuances that we have to discuss and to be prepared for possible scenarios that not quite obvious on the daily chart. So first of all, let's specify the next target. You can see on the daily chart we have next extension. It's 1618 extension, this butterfly that stands approximately around 131.30, and it also will be the major fib level from this collapse candle. From this top to this bottom, this will be 3.8 resistance. That, guys, also will be the yearly pivot point and has not been tested yet in 2017. So that will be first approach of the market right to the yearly pivot point. But what's more important is that right now, guys, market stands actually at weekly overbought area. That's why we think that upward potential of the market is very limited on the common week. Most positive scenario that we could expect on the common week is reaching this target and turning to retracement. So we should forget about this target for next week because it stands beyond the weekly overbought. Probably we will talk on it the next time because we also have another extended target approximately around 135 area. But all of them stand beyond the daily overbought. That's why they are not really interesting for us right now. What's more important for us is this area. It's 131, 31.40 area. It's next destination point on the common week. On the intraday charts, we see that this will be also monthly pivot resistance one. It's 131.55. And this is the May pivot. So a pivot resistance one, so new pivot point for the May. And here are the fib levels where retracement could reach. Also, as you can see, nicely bullish bearish divergence here. On the 4-hour time frame chart, guys, we have interesting detail that the patterns that we have here mostly is limited with the 130 target, but our target stands on 131.30, so 100 pips higher. What could it mean? It could mean that the upward action and retracement could take the difficult sophisticated shapes or compounding shape. For example, the most probable scenario that could happen is market will hit this target of this butterfly, then it will show minor retracement down. So for example, it could retest or reach the May pivot point. It's 127.60 area. That's, by the way, coincides with the fib level. And after that, we will see another leg up when the market will complete finally the target on the daily chart. And only after that, the major retracement will start. So currently, guys, I can't foresee any other scenarios that could happen, because this scenario seems most logical in the current situation, because it happens quite rare when the market leaves untouched important targets and turns to and change the trend. So usually the market gravitates to important targets, reach them, and only after that retracement is starting. Taking into consideration that 130 will be also yearly pivot point and has been tested yet. So the gravitation probably will be really significant. And I still think that the most possible scenario, most probable, is the reaching of the target first and major retracement second. So if market will start retracement right from this point, it will be probably small retracement. As I said, just testing, for example, the monthly pivot point or even smaller retracement. So market will reestablish upward action. Another reason why we think that reaching of the targets is possible before retracement is because, take a look, market actually already has done the most hard work. So it has broken through the important resistance cluster. Right now it stands in a relatively free space and then halfway to the 1618 target. In such circumstances, usually market continues action up and reaching the target and then turn down. Besides, we are not at the daily overbought, we are at weekly overbought. And weekly overbought is a bit flexible area for a lower time frame. So it lets market to fluctuate around and even it lets market to pierce the level of the overbought within the week. So this is relatively not really hard resistance. This is flexible resistance, and the market could show some action. That's why we think, just compounding all these factors together, we think that the most probable is that market will reach this target first and then turn to the major retracement. So that being said, on the coming week we expect upward continuation. If retracement will start here, it will be probably small, and after that market should continue move action to the 131.30, 131.40 area. As soon as it will be completed, the upside potential will be limited by the weekly overbought area, and after that we expect that some stronger retracement, moderate retracement will take place.